Hello, everyone, and welcome to this HR compliance session on the Federal Overtime Baseline. Today, we are focusing on one specific update. The federal salary baseline for most white-collar overtime exemptions has been formally restored to $684 per week. This session is designed for HR, payroll, compensation, recruiting, people managers, and compliance teams. The goal is not to turn everyone into lawyers. The goal is to help HR professionals understand what changed, who may be affected, what questions employees and managers may ask, and what practical steps HR should take now. One important point at the start: this update should not be described as a new overtime increase. It is better described as a formal restoration of the 2019 federal baseline after the 2024 overtime rule was vacated by federal courts. We will keep the discussion practical, but this is educational information only. Employers should consult legal counsel before making final classification decisions. Here is how we will move through the session. First, we will explain the update in plain English so everyone understands what the $684 per week number actually means. Then we will compare the Trump-era 2019 rule with the Biden-era 2024 rule, because that comparison is where most of the confusion comes from. After that, we will identify who is impacted, which employees, which job groups, and which HR workflows are most likely to face questions or compliance risk. We will also look at the real legal incidents behind this update, specifically the Texas litigation and the Flint Avenue litigation. Those cases are important because they explain why the 2024 rule disappeared. Finally, we will focus on HR response and training. This is where the webinar becomes operational. Who needs training, what type of training helps, and how HR can turn this update into a cleaner classification and payroll workflow. The key specialist framing is simple. Do not present this as a new overtime increase. Present it as a federal baseline restoration after court action. In plain English, the Department of Labor has restored the federal salary baseline for most exempt executive, administrative, and professional employees to $684 per week. Annualized, that equals $35,568 per year. This does not mean every employee paid $684 per week is automatically exempt from overtime. It only means the employee has met one part of the federal exemption analysis. HR must still check the salary basis requirement and the duties test. In other words, salary alone is not enough. The current federal position is that the DOL removed the vacated 2024 regulatory text and republished the 2019 Part 541 language as the operative rule. The rule was published and became effective on May 15, 2026. There is also no comment period for this action because it is a final rule and technical amendment, not a proposed rule. So the clean HR explanation is this. The federal baseline is $684 per week again, but classification still depends on pay structure and actual job duties. To understand this update, HR needs a timeline. In 2019, during the Trump administration, the Department of Labor issued a rule setting the standard salary threshold at $684 per week. That rule became effective on January 1, 2020. In April 2024, during the Biden administration, the DOL issued a new overtime rule. That rule would have increased the standard salary threshold first to $844 per week and later to $1,128 per week. It also included automatic updates every 3 years. Then, in November 2024, federal courts in Texas blocked and vacated the 2024 rule. The result was that the higher Biden-era thresholds could not continue as the operative federal standard. On May 15, 2026, the DOL issued a technical amendment that formally removed the 2024 text from the Code of Federal Regulations and restored the 2019 text. That is why HR should explain this as a technical correction following court decisions, not as a brand new policy increase. This slide compares the two frameworks because the numbers are easy to mix up. Under the Trump-era 2019 rule, which is the current federal baseline again, the standard salary level is $684 per week. The annual equivalent is $35,568. The highly compensated employee threshold is $107,432 per year. There are no automatic updates built into the restored federal rule. Under the Biden-era 2024 rule, which has been vacated, the standard salary threshold would have moved to $844 per week from July 1, 2024, and then to $1,128 per week from January 1, 2025. The annual equivalent would have reached about $58,656. The highly compensated employee threshold would have increased up to $151,164 per year, and the rule included automatic updates every 3 years. The core takeaway for HR is this. The Biden rule would have expanded salary-based overtime eligibility for many workers, but courts rejected that rule, and the DOL has now removed it from the regulations. This is one of the most important slides in the webinar. The rule is not only about salary. For HR, the safest message is salary level plus salary basis plus duties test. First, salary level. Under the current federal baseline, most executive, administrative, and professional exemptions require at least $684 per week. Second, salary basis. The employee must generally be paid a fixed salary that is not reduced because of the quality or quantity of work performed. Third, the duties test. The employee's actual primary duties must fit the legal exemption standard, such as executive, administrative, professional, computer, or outside sales duties. Here is a practical example. An employee may have the title assistant manager and may earn more than $684 per week. But if that person spends most of the day running the register, stocking shelves, covering customer service, and has little real authority over hiring, firing, discipline, or management decisions, the title alone does not make the role exempt. HR has to look at the real job, not just the job title. The groups most affected are not always the highest paid employees. The biggest impact is often on salaried employees near the threshold, and on roles where the title sounds exempt, but the duties may not support the exemption. First, salaried workers paid above $35,568, but below the vacated 2024 thresholds may be confused. Some may have expected overtime eligibility under the 2024 rule, and now HR may need to explain why the federal salary baseline is back at the lower level. Second, lower paid supervisors and assistant managers need careful review. Their titles may sound managerial, but their day-to-day work may be routine or production-focused. Third, HR, payroll, accounting, office, and administrative roles often require duties test review, because the word administrative in a job title does not automatically mean the role meets the administrative exemption. Fourth, multi-state employers need extra caution because some states may have higher thresholds or stricter standards than federal law. Finally, employers that already reclassified employees because of the 2024 rule may need documentation, payroll review, and careful employee communication. This update can create several practical issues, even when no lawsuit is involved. The first issue is employee confusion. Employees may ask why overtime eligibility changed, why a planned salary adjustment stopped, or why a reclassification discussion is now being revisited. The second issue is payroll settings. Some organizations may have updated payroll systems, pay codes, exemption flags, or timekeeping rules in preparation for the 2024 thresholds. Those settings should be checked. The third issue is reclassification history. If a role was already moved from exempt to non-exempt, the employer needs a documented business and legal reason before making any further change. The fourth issue is manager assumptions. Managers may incorrectly think salaried means no overtime. That is still wrong. A realistic workplace example is this. Payroll may have prepared a group of employees for non-exempt treatment because of the 2024 rule. After the court decisions and the DOL technical amendment, HR should not simply reverse everything overnight. HR should review duties, state law, payroll setup, employee communications, and business risk before deciding what to do next. In Texas versus U.S. Department of Labor, a federal court action vacated the 2024 overtime rule and prevented the Biden-era salary threshold increases from continuing. The HR lesson from that litigation is that courts emphasized the continuing importance of job duties. Salary level can be part of the analysis, but it cannot become the main driver of exempt status when the FLSA exemptions are still tied to the type of work performed. Flint Avenue LLC versus U.S. Department of Labor was a separate Texas case challenging the 2024 rule and is also part of the litigation background cited in connection with this technical amendment. For real-world impact, Reuters reported that the 2024 rule would have extended overtime protections to about 4 million salaried workers before the rule was struck down. That is the impact number HR can use, but it should be tied clearly to the vacated 2024 rule, not the restored 2026 baseline. HR should handle this update through a structured workflow. The first step is to identify all salaried exempt employees, especially roles close to the federal salary threshold or roles that were reviewed because of the 2024 rule. The second step is to verify. HR should check the salary level, salary basis, duties test, and any applicable state law requirement. This verification should not be done from payroll data alone. Payroll data tells HR how much the employee is paid, but it does not prove what the employee actually does. The third step is documentation. HR should update classification reasoning, job descriptions, approval notes, and payroll records where needed. The fourth step is communication. Employees and managers may ask direct questions, so HR should explain the change clearly without promising what future DOL rulemaking may or may not do. The fifth step is monitoring. HR should continue to track DOL activity, Federal Register updates, litigation, and state law changes. The best position is to treat this as a classification cleanup opportunity, not just a number change. Training should be role-specific. One generic training session for everyone will not solve the practical workflow problems created by this update. HR compliance and employee relations teams need training on exemption rules, duties test documentation, and risk reviews. HRBPs and people partners need to know how to spot risky roles and advise managers when job duties do not match the exemption label. Payroll and timekeeping teams need training on overtime setup, time records, pay code configuration, and non-exempt handling. Compensation and total rewards teams need to understand salary thresholds, pay bands, and reclassification impact. Recruiting and talent acquisition teams need training on job posting language and how exempt or non-exempt status should be coordinated before a role goes live. Department managers need practical training on scheduling, overtime approvals, and avoiding off-the-clock work. Finance and business leaders need training on cost modeling, budget impact, and change communication. The training priority is clear. Start with HR, payroll, and managers, then expand to compensation, recruiting, and finance. A blended training model works best because this update affects multiple workflows. The first training type is a classification review workshop. This is best for HR compliance, HRBPs, and compensation teams. It should walk through salary level, salary basis, duties tests, and documentation steps. The second type is payroll and timekeeping system training. This is best for payroll teams and should cover overtime rules, pay codes, time tracking, corrections, and audit trails. The third type is manager do's and don'ts training. This should cover off-the-clock work, overtime approvals, scheduling practices, and when managers must contact HR. The fourth type is recruiter and job posting training. This helps talent acquisition align job descriptions, exemption status, salary range wording, and approval workflow. The fifth type is an employee communication briefing. This is especially useful if employees were reclassified or expected a change. The sixth type is state law overlay training. This is essential for multi-state employers because the federal baseline may not be the highest standard that applies. This slide turns the training plan into a practical map. HR compliance and employee relations teams should focus on duties tests, exempt and non-exempt risk, and documentation. The output should be an updated classification checklist. Payroll and timekeeping teams should focus on overtime calculations, time records, and pay code setup. The output should be validated payroll configuration. Managers should focus on scheduling, approval rules, and off-the-clock risk. The output should be a simple manager escalation guide that tells them when to contact HR before allowing extra hours, changing schedules, or asking employees to work outside recorded time. Recruiting should focus on posting language, salary range coordination, and exemption status approval. The output should be a cleaner job requisition workflow. Compensation and finance should focus on threshold modeling, cost planning, and state overlays. The output should be a pay band and budget review plan. Best practice. End each training with one usable tool, such as a checklist, guide, decision tree, or audit template. Training should produce workflow control, not just attendance records. First, there could be future DOL rulemaking. A future administration or DOL leadership could propose another salary threshold update. That is possible, but it is not confirmed. Second, there may be more litigation activity. Employers, business groups, states, and worker advocates may continue to challenge or defend wage hour rules. Third, state-level divergence may continue. Some states may maintain higher salary thresholds or stricter overtime requirements than the federal baseline. Fourth, HR may face workforce communication pressure. Employees who expected overtime under the 2024 rule may ask why the rules changed or why a prior communication no longer applies. Fifth, audit expectations may focus on duties tests, job descriptions, timekeeping records, and documentation. The correct message is monitor official DOL and Federal Register activity. Do not say a specific future federal threshold increase is confirmed unless an official source confirms it. A balanced explanation is important because this topic affects both employers and employees. From the employer and HR side, the restored federal baseline provides more certainty under the current federal standard. It also creates lower immediate federal salary pressure than the vacated 2024 rule would have created. From the employee side, there is a concern that some salaried employees who expected overtime eligibility under the 2024 thresholds may no longer qualify under the federal salary level alone. That can create frustration, confusion, or employee relations questions. From the HR risk side, misclassification risk remains. The restored $684 baseline does not remove the need to review actual duties. Salary alone is never the complete answer. Operationally, employers may need to review reclassification decisions, payroll setup, employee communications, manager training, and state law requirements. The specialist close for this slide is simple. The restored $684 baseline gives federal clarity, but it does not remove HR's duty to classify employees correctly. First, confirm the current federal baseline, $684 per week, or $35,568 per year. Second, identify salaried exempt roles near that federal threshold. Third, review salary basis and actual duties. Do not rely only on job titles. Fourth, check state overtime thresholds before making decisions, especially if the organization operates in multiple states. Fifth, review payroll and timekeeping system settings. Sixth, document classification decisions and approvals. Seventh, train HR, payroll, managers, recruiting, compensation, and finance. Each team needs different training because each team controls a different part of the workflow. Eighth, monitor DOL activity, Federal Register publications, litigation, and state updates. The recommended closing message is this: HR's goal is not only compliance with the number. The bigger goal is defensible classification and clean workflow control. That means the employer can explain why a role is exempt or non-exempt, show the documents supporting that decision, and manage overtime consistently.